The next major account that is coming under demand deposit is current account. Current account, the fundamental difference between savings bank account and current account is that while savings bank account is opened by individuals for keeping their money, for saving, for their future saving, current account is opened by business people for their day-to-day transactions. This is a very important distinction. This question may be asked in the interviews. Mostly in many interviews this question is being asked repeatedly in the bank exam interviews, and students they are fumbling to answer. The basic difference is very simple. Savings bank account is opened by individuals and middle class households for keeping their money safe and for the purpose of saving, whereas for business purposes, where there will be large number of transactions, large volume of amount and credit, a current account is opened. Normally current account is opened by business people, sole proprietorship firms, partnership firms, limited companies, both private limited and public limited. All these people open current account because they are doing business and the volume of transactions will be more and the value of transactions will also be more. But there is a question some used to ask, sir, you said business purposes can be opened. Can individuals open a current account? Yes, any individual, there is no prohibition for an individual from opening a current account. An individual can also open a current account. And what is the interest that is payable on current account? This question can be asked in the interview or also in the exam. What is the interest? Now I used to write this in all my classes so that the message goes very clear, loud and clear to the students. What is the interest payable on current account? The interest is a very big zero. What is the interest payable on current account? 0%. There is no option given to the banks. It is a Reserve Bank of India guideline. At no point of time a bank can pay interest on current account. We have seen several cases where Reserve Bank of India has come down on the banks which paid some kind of compensation in savings in current account with a very heavy hand. Because it's an RBI stipulation, thou shall not pay any interest in current account. Please be sure that nobody can violate this rule. And the interest that is payable in current account, that's why I have drawn a big zero so that the message will go loud and clear. Earlier, during 80s and 90s, when we opened current accounts, there was no restriction on the number of transactions or the number of amounts that could be deposited and all. But over a period, there has been some developments in which some current account parties have misused the facility. For example, some accounts will be opened where there will be every day 1,000 rupee deposit, 1,000 deposits of 1,000 rupees, 1,200 rupees, 1,500 rupees, like that. Then in the end of the day, the entire money will be transferred to some other bank. So the whole bank branch will be doing this one current account bank business only. For example, there used to be some schools or there used to be some non-banking finance company collecting money from various subscriptions from various people. So a current account is opened and 100 or 200 fellows every day come and pay 1,000 rupees, 2,000 rupees, 1,500 rupees, various small amounts totaling to 200, 300 remittances. And then finally all the remittance will be transferred by a single transfer and it will go to some other bank. So this current account was a totally uneconomic and unviable proposition for the bank, and therefore many banks have now come out with restrictions in both the volume as well as the value of current account transactions also. Let us now look at some of the typical current accounts of one or two banks. First let us start with ICICI Bank. ICICI Bank is having a basic account, starting account called Shubha Aramb for your new business. This Shubha Aramb news current account they say for first 6 months, the minimum monthly average balance is 0. So there is a honeymoon period. For up to this honeymoon period of 6 months, you need not maintain the monthly minimum average balance. But once the honeymoon period is over, thereafter you should maintain a monthly minimum average balance of 25,000 rupees. So practically, the minimum monthly average balance is 25,000 rupees. And what are the restrictions? Cash deposit, combined free deposit up to 12 times of the maintained monthly average balance during the transaction month, or rupees 1.20 crores, whichever is lower. So cash deposit, you can deposit up to 12 times your monthly average balance. If your monthly average balance is 30,000, multiply by 30 into 12, it is 3.12 into 30, that is the amount up to which you can deposit cash. Or 1.20 crores, whichever is lower. Then non-cash deposits, free up to 50 times the monthly average balance maintained during the transaction month. Then 100 check sleeves will be given free for each month. Suppose in a month you ask for more than 100 check leave, second check leave, you will be charged. Number of free transactions per month is 200. Charges for non-maintenance of monthly minimum average balance is rupees 1000 per month. So please remember, if you open a current account with ICICI Bank, this is Shubha Arambha current account, you should maintain a balance of 25,000 minimum monthly average balance, and if you don't maintain that balance, they will be debiting 1000 rupees into your account every month. Then collection of checks and remittances by NEFT and RTGS is free. So this, whatever we have seen, is for ICICI Bank Shubha Arambha scheme. There is a similar current account for State Bank of India. It is called Sahaj current account. The Sahaj current account of State Bank of India is for individuals, proprietors, friendship firms and partnership firms. The quarterly average balance is 1000. Please look here. There ICICI Bank monthly minimum average balance is 25,000 after the initial honeymoon period of 6 months. Here quarterly average balance is only 1000, 1 by 25th. That is 25,000. This is 1000. Second is penalty for non-maintenance, rupees 300 per quarter. It will be only found out in a quarter and then they will charge you only 300 rupees per quarter. Cash remittance maximum 10,000 per day. ATM debit card maximum withdrawal rupees 15,000 per day. Corporate internet banking free. So these are the basic restrictions placed by State Bank of India in their Sahaj account. Now let us look at another current account of Bank of Baroda. Bank of Baroda, they say cash deposits up to rupees 50,000 or up to 10 packets, that is 1000 pieces of notes of any denomination taken together, whichever is higher. If suppose you may deposit more than 10 packets a day, up to 10 packets you can deposit. Because you know the problem of cash deposit is the biggest headache for all banks. And if suppose somebody who is going to dump huge cash, counting it and accounting for it is a very big, very laborious job. Therefore, they are now restricting the cash deposits. About 10 packets, cash deposits above 10 packets, 1000 pieces of notes charges will be levied at the rate of rupees 10 per packet or a part thereof. You will find that the banks are only putting the restriction on deposit. They are not putting any big restriction on withdrawal. Why? In the case of withdrawal, even if it is going to be a large value amount, banks had already counted and sealed packets are available with the bank. 1 lakh means 10 packets. The cashier will simply take 10 packets and hand over. It will be only 2 minutes job. On the other hand, the same 1 lakh has to be received in various denominations. He has to count physically, put the machine in the machine. Nowadays we have got a counting machine. Even then it is a very laborious job. Therefore, banks are putting some restrictions on the cash deposit. We have seen 3 models. First is ICICI Bank Shubha Arambha account. Second is Sahaj account of State Bank of India, where the minimum monthly average balance is, quarterly balance is only 1000 rupees. whereas it was 25,000 monthly average balance for ICICI Bank. And also we have seen what are the various restrictions put up by this the various banks. Therefore, even though theoretically in the good old times about 15-20 years back there was no restriction. Current account means you open current account, you deposit any amount, you withdraw any amount, there was no restriction. Over a period it has developed, banks have seen some uneconomical accounts, unviable accounts which were big headache for the bank, which was not producing any income for the bank, but at the same time lot of headache is there. So they had to weed out those things because it is unviable from the bank's point of view. And therefore they have brought in some restrictions in the form of cash deposits and some other restrictions are also. And also the minimum average balance between private sector banks and public sector banks is huge difference is there. That also you should take into account. There is another important point. There is one Reserve Bank of India guideline with regard to current account which everybody should be aware. Before opening a current account, simply suppose somebody comes, I want you to open a sole proprietorship account, you simply cannot give the application and then open the account. Because sometimes these people may have borrowed from some other bank and to escape the rigor of control from that bank, they would come to you and open a bank account. I have seen this many times. They would have borrowed from Canara Bank and Canara Bank would have put some restrictions. To escape the restrictions, they will come and open account with some other bank. And if suppose some other bank opens, then all the transactions will be routed. Canara Bank, which has originally financed that institute, will be in the dark. Will not be able to monitor the account. This account will go bad. Over a period of time, it will become NPA and then it will ultimately land up as a loss asset for the bank. To control all these things, the Reserve Bank of India has said, wherever you are opening a current account, you must ensure that these fellows are not having accounts with any other bank and especially any other loan facilities. And in such a case, you should obtain a no objection certificate from the lending banks. And then, if a bank is very careless, very casual about opening current account, Reserve Bank of India has given a warning. If you are very casual and open such account which results in some other bank's account becoming bad, then this bank which has opened the account is guilty of abetting and even siphoning of funds. Abetting, siphoning of funds. Abet means to help. That fellow is opening a bank having borrowed from Canara Bank and to escape the control of Canara Bank, they come and open another account, let us say with Vijaya Bank. Then Vijaya Bank will be held guilty of abetting, assisting, helping, siphoning of funds. Therefore, banks should be very wary of, very cautious in opening a current account, and they should ensure that the persons who open current account with us now, they don't have any other borrowing facilities from some other bank. So these are the basic things that we should do before opening a current account. And always remember, current account is for business people. Number 2, no interest shall be paid in any form in current account.